Welcome back, everybody, to Market and Sectors. My name is Mike Fairbourn. Great to be with you, folks. Today, I did want to take a look today at a decades-old indicator that I'd read about, a couple decades ago in terms of how to kind of read it. I know a lot of traders, investors might have used this in the past. I haven't heard about a lot about it lately, but it can give us interesting insight into the market. So definitely an indicator you've heard of. We'll dive into it here just momentarily. But I did want to welcome you all in. I wanted to welcome, let's see, Ken Mayfield. How are you doing? We've got Robert Boucher. We've got Bob in Michigan, David Trezell. We've got Speak, Sharon, Joshua. Great to have you on board, folks. Any questions, comments you have, throw those into the chat. We're going to look at, as I mentioned, kind of that decades-old indicator that shows us some indications in terms of potential strength at shorter-term bottoms. I want to look at that. I want to look at the STAX index. That came out from last week. Remember, we had that discussion on that. So it is out now. I want to review it and see exactly what it's telling us as we compare other market indications and different scenarios as well. So let's go ahead and get started with our disclosure so we can jump on into things. The information here is provided for general information purposes only, should not be considered an individualized recommendation or personalized investment advice. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money software application is for educational purposes only. A quick note here on futures and futures options trading. It does involve substantial risk. It is not suitable for all investors. Sometimes we will reference futures contracts while we are here. And let's see, some final points here to note. Past performance is no guarantee of future results or success. And a quick note on the bottom there is it does state that historical data should not be used alone when making investment decisions. The STAX is not a tradable index. The STAX should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. Okay, so with that, let's get our main screen up here and start looking at the markets. I'll take a look at Fastenal here. It's got one thing for us to look at just briefly. But folks, looking back just broadly speaking at the markets first, and then we'll just kind of dive into it from there. We're going to the stacks after this. But at the market, we've been talking about this upper line for a little bit, right? This upper channel line. And as you can see, if I go back to a 2-year chart, I have originated this line all the way back to really the beginnings of this higher high and higher low in the S&P 500 index. It can and has been operating as an interesting resistance level. And we've got a little bit of confirmation on that. We had some even early or late last week along that level. I'm going to go ahead and maybe just zoom in on that now. We're on a 2-year right there. But this can be helpful when you have prior highs. I should say when you have a lot of potential upside room up here where prices have not been. Remember, this is an all-time high range, and so using this can be of interest. I would say this too, though, if I zoom in just one more time on this, you'll see that right through here, we do have a higher level as well. So can we continue to break up above here? We'll tap into seasonality here just momentarily as we look at that. Again, this sort of indication, this upper channel line, a lot of times you can get good insights just from technical indicators. Using an indicator that looks at linear regression and plots standard deviation lines above and below that. This is referred to as a reversion to the mean. I don't have the exact same levels as the linear regression line, but I still want to just throw that on again because I think this can be helpful to kind of look at as we check out where those standard deviations lines are. You can see I'm close to it, but it's not quite there. This goes back over the 2-year time frame. The linear regression lines will adjust over the time frame that you've got because it's taking into account the full 2 years worth of data. We just want, let's say we're just looking at the last 1 year, which is more relevant. You'll notice that you can see over here that actually the upper line suggests that, okay, we touched off here very well and very well in the blue lines, but you'll notice that this longer term trajectory that I have over a 2-year starts to shift a little bit differently. What have we been doing in terms of price action relative 2-year versus 1 year? Take a look at the lines. Look at the slope of the blue line here. It's extending higher. The main line that I had, which kind of comes together somewhere in here where they kind of touch. I've got my main 2-year line versus the 1-year line. Folks, we're breaking up above it. this simply tells us that we've seen more strength over the past 1 year. In other words, the trend is strengthened over the past 1 year relative to the prior 2 years. And so a lot of times traders might use a linear regression line like this. So actually, having said that, you can see up top here that the upper resistance point, which we had seen previously over here on our blue line, doesn't really come up to this point. The reason why I bring this up is because I think it could be quite interesting as we approach. I mean, where are we right now? Yeah, we're on the 11th of December. And as we're approaching closer and closer to there it is, our grid lines right there, the year-end line. Remember what seasonality had shown us on this? That we might just, on average, tick up over that time frame. Just keep an eye on this upper level, because there could be resistance that pops up at that point. It's tricky to know, but that's one way to look for potential resistance levels when there really is not price resistance. We've never had price resistance at, let's say, near 6,200. If I were to extend this into the future over this plot line, where could we be if we did rally slowly towards the end of the year? Well, all I'm simply going to do is right-click here. I'm going to go into edit that study, and I'm going to say the upper right channel right here, and we don't. Oh, it doesn't have the extension. Okay, it's another one that has the extension. That's okay. All we've got to do is this: we take a line through here, like we've got, like a trend line. You draw it and kind of overlay it over the top, and just extend that to the year end right there. And that could give us the possibility of a projection. Notice how close that is to 6,200 right there. We don't know if we'll get that, but if it does follow the existing trend, which is clearly up, we could keep eyes on this. And so I did find that somewhat interesting to kind of check out, as we looked at that. Okay. Also let's go ahead and take those off though right now, and I can take off basically a few things, but that's the linear regression line. By the way, sometimes when you trade above those levels or below those levels, some traders will look at that as an indication. If you're breaking up above one of those lines, that means you're trading above the mean, and you might test those upper levels. If you're coming back off the top, like something like over here, then you could come back down to the mean, for example, before you go maybe to the bottom channel line, the standard deviation below the main linear regression line. So I just want to throw that out initially because it is happening on the markets right now. And it does tie in a little bit to seasonality. In fact, let's pull up the seasonality chart real quick. Here is our style. I'm going to go over here and just go under standard seasonality right there. And you can see down here, I'm skipping ahead a little bit, but just as a quick note, here is your average of the past 5 years that we've looked at. And it looks very similar for the 10 and the 20 as well. But you see what the average does? We're kind of, it looks like, because a lot of years might look like the average year. They might start to trend higher and be strong, but you'll notice we kind of run towards the end of the year. You see that? We just kind of creep up higher here. Just creeping. And it ends higher on the year on average, actually, over the last 5 years. Before, in January, it might flatten out a little bit. But we'll see what happens. That upper linear regression channel line could be of use if, in fact, we just continue to go higher. If that makes sense, all right. So let's go back to this regular chart. I'm just going back to standard. Remember, I find all this in my style there. Now, this RSI down here, the RSI was developed in 1978. So it's a little bit, I mean, the indicator itself is older than a couple of decades. But the first time I heard of an approach that some traders will use with it, it comes around where support levels can actually be on the chart. In other words, you're using momentum to kind of compare that to support levels, horizontal resistance, diagonal resistance, whatever the case might be on the chart that you're looking at itself. Okay, now you can use this on the markets. In fact, I think a good example is, like, say, for example, let's look at the S&P first. So looking at the RSI, I want to focus on two key levels. That would be the 40, and you don't see it, it's right in the middle here, the 50. So really the 40 and the 50, and really anywhere in between on the RSI. And again, we're looking for pullbacks that might be coming back down to a support level. It could be bouncing off a particular point, but we're using momentum, the closing prices of the RSI. right? Which is measures based on closing prices over the prior 14 days. Very interesting way to look at price action, closing prices, right? If you know, in other words, to go higher, the share price to go higher, or whatever, in this case, we're looking at this index, but to go higher, you have to have higher closes from one day to the next. RSI dives into that. It's a momentum gauge here. So for us, the RSI, we're looking at this between 40 and 50 on a pullback. Here it is right there. Now, do you notice over here too, there was a support level. If I drag this back even a little bit further, there could be what was resistance, could now be support and kind of our mean line here, and we bounced higher. Well, what was our read on that? 40. Now, 40 is kind of the minimum level that some traders would look for on a pullback. A stronger pullback would occur at the 50. Both are valid, but this could just represent a stronger move. So where would 45 fit on a pullback? It's just showing there's strength at that base. Okay, so this is something that I haven't seen it talked about in the longest time, but it is interesting, and I think it's still relevant in a lot of ways. I mean, just take a look at the markets. It can be relevant. Look over here on the run. Okay, so this is one, and by the way, 38, 39, I think it's very close to it. It can be interesting. Look over here. This was a bit of a higher low, so the trend could be up. Come over here, take a look at this with me. 40, we have another one right there. 40, we have one just slightly above there, right into this range. Now, where it gets a little bit tricky is you start to break below that 40. That's just more of an indication, possibly, folks, of additional weakness. But remember, we have the chart to kind of also help us here. Let me flip some colors so we can get this going up here on this end and just kind of show you. Because, okay, so one thing we just mentioned about was the trend. We always want to try to incorporate the trend into these considerations too, okay? But then with that, what about, potential price patterns, such as possible flag patterns? Look at all that support right through there. Look right down through here. Right near that 40 level. Now, this one was clearly right off of 40. I think this one was just almost right. I mean, sometimes you'll see it like almost right at 40 on that pullback, but that can be an additional confirmation to keep eyes on. Again, though, folks, 40 to 50. 40 being the minimum, 50 being the stronger kind of an indication, okay, in terms of the pullback of the trend. And what are you seeing up here? What about this pullback that we had recently? Well, what's that number? That number is, if I could point to it, 50. Right there on that pullback. Do you see anything else interesting with this pullback here that could correlate to that? Gap, high, highs, high and high, drawing a line through there. So we had some indications on the chart, but then also maybe some confirmation down here on the RSI. In other words, it wasn't this pullback, although there were a lot of bars day after day after. There were 4 bars, big bars, coming down on this. It actually stopped right when you got near that 50 and held this support point. So I wanted to bring that up. That came up as a question previously. I thought it was a great way to start today's discussion because we are seeing some of that. And as the markets themselves have gone higher, NDX, right, the S&P or the NASDAQ 100, you could also look at this too. Look down here with me. Yeah, see this is just above. This is like the 45 range, like a 45 there. Just right around 40 there. Support, question mark? I just put in the question mark because at the time we wouldn't have known. But you'll notice this one had the bottom trend line of an ascending triangle right there, as well as here and here. Folks, these came in the 50 levels right through there too. So interesting point, but it's your reference to momentum on the chart is how that could potentially be used. So there we go. Let's see. Villager says, Mike, I like the script you provided that attaches the seasonality to days. Yeah. So this is just actually tied right into the platform there. If this is the one you're referring to, oh, okay. I think that was one. Maybe if you're referring to the one, Villager, that we discussed, where it projects that out into the future. That was one that we discussed in the ThinkScript class, and so that one was. You can find that in there. In fact, I do have a link. Oops, sorry. We'll take a look at the stacks here in just a second. But here is, like, for example, here would be, if you're interested. Sorry, one second. I'm going to mute that. Let's go ahead and just point, I'll throw this into the box right here. This was in one of these classes. That's the ThinkScript, or the playlist for the ThinkScript class that I just threw into the chat. If you want to take a look at that. By the way, anything in ThinkScript is not guaranteed for timeliness or accuracy, right? It's just built with the data. It takes the data that's being fed into the platform and then it shoots out the indication. Is basically how that works. But yeah, we could definitely go. Yeah, okay, that was the one you're referring to. Yeah, that would be a fun one to look at going forward as well. But that does give kind of a projection into the future based on what seasonality is projecting for the stock. We should actually do that in this class going forward. That would be actually a pretty interesting tie-in. So we can, yeah, that would be one. We'll definitely do that. All right. Good call. All right. Well, that, by the way, I pulled this up. It was good timing. I clicked on something different, but the stacks came up, and this is where I was going. So it read my mind to a degree. This is the stacks, right? So the Schwab Trading Activity Index. We talked about this last week. We wanted to see how the stacks compared relative to the market. And you can see that up top here. So S&P 500, right? Or SPX strength. And by the way, you're seeing that strength over here. They're both on the y-axis, right? But the SPX is over here. So here are our numbers on the SPX, and that is this line right here, kind of that grayed out line that we're seeing. Now the stacks down here is an indication of where we could be going in terms of what it measures, right? And remember what we look at here? I'll just quickly show you, but this is kind of first of all, it's a summary of some of the trades that have been going on in terms of, what Schwab looks at. I'll just read it specifically. Proprietary behavior-based index that is designed to indicate the sentiment of individual investors portfolios by measuring what investors have actually been doing. When they mean that, what have they been trading and what positions and how they were actually positioned in the market. So so in other words, holdings and trading is what we're looking at here. Now, how did that fare relative to the market? It did go up with the market, but you can see that it went up very, very slowly. In fact, if I were to look at that, it's just such a small number, but it did increase in the month of November. Interesting, if you take this line, when was the last time we were at these levels in terms of think about trading activity amongst a group of Schwab accounts, right? All the way there. That is, folks, in my book, that is 2019, as you can see right there. So think about trading, think about holding positions. We're still equivalent here at this same level, but the price of the market has gone up dramatically here. So not so much through the stacks index, what measure here through Schwab. So it's actually really quite weak. In fact, one other quick note on the stacks is we did break a low here. So there is that negative divergence. This is a new low. And that is a very, very moderate bounce here. So you would have to say, just relatively speaking, more caution relative to where the market's at, right? More risk averse, all else equal if we're measuring strength of trading, strength of positions. Notice over here, when the stacks really starts to get going, this is what you'd be looking for. Here you see the S&P behind the scenes, really, really quite strong. And what's right behind it? The stacks. And in fact, at one point, it breaks up above that level. And that was actually an interesting, this is all in hindsight, but somewhat of it, some people were just like looking at it. It broke higher, and the market also stayed higher after that. So that did not happen this time, right? After this pullback, we did just kind of stay low, meaning that maybe we just didn't get the activity entering back into the market. So there you go. It's always an interesting perspective just to see amongst a large basket of individuals and just kind of peer groups what that might be looking at, what we might be seeing there. All right, there we go. So let's keep going. So that's the stacks. We got it for November, and those come out generally right around the first part of the month as we get into that. Okay, I did have, by the way, there is a ThinkScript class that I taught. I'll just throw this out here because it is relevant to our discussion. It is this class right here. I'm going to put the link into the chat. And basically, it's just a code. It's just a trend reversal coding that I created in the scan tab that looks simply at those pullbacks That doesn't show very well at all. Those pullbacks to a 40 or 50 RSI here. So it tries to get the trend in here, and then it gets the pullback. So let me just do this real quick. This is the class that has that. You can take a look at it if you are interested, but yeah, I wanted to throw that out there for you. Here it is right there. So that is the specific class, and I'm going to go into it. And by the way, it does have, I can actually share. Shoot, I'll just share this. I've got the scan tab up. This was the scan itself. I just had gone through and just kind of looked at some companies here. This is one of them that pulled back to right around that 40, or is trading near the 40. Do you see it right there? That has been up. That is Fastenal as an example. We're just diving in now. I just want to give you an example of something in the market. Then I'm going to take a look at sectors here real quick. But since I'm sharing this, I thought I'd highlight this for you. Notice the gap over here. We might just be filling that gap. If I draw a line through here, you see that's a potential support as well. Notice you're just kind of barely curving over at that 40 level, right at the RSI as well. So what traders could potentially look at here, if they were looking at these kinds of indications, was maybe, hey, maybe, and we don't have one yet, but maybe what if we have a K hold or a couple 2-3 day follow through, so that in fact this could just be a larger potential flag pattern with the possibility of moving up. Okay, this scan actually finds these pullbacks in the direction of the upward trend. I'm going to share that with you though, so you just have this in case you want to use it. It is in that class. In that class, I go into more details on how to use it, but I'll share it here just so you all have it into the chat. And there it is. That is the scan. Just threw that out there right there. But this is the reversal scan using the RSI as possible reversal. Okay. All right. Well, we dove in real deep. We went past sectors. We skipped sectors. What's going on? We missed it. We got to jump back to sectors here. But we got a little carried away on that RSI. But that's how that works. By the way, before I hit sectors, let's just stick broadly speaking to also the Fed watch tool. This is just right off my X channel, just on X. You can follow Cam and I on X. Cameron May CS, Mike Fairbourn CS. Love to have you on board. All I was pointing at here, and just keep in mind on it that, you know, right now, December rate cut probabilities for the 25 basis points have shot up to just under 100%, 96.2% chance. Now that Fed rate cut, I think the Fed meeting, the FOMC meeting, is the 17th to 18th, but I think the cut itself is on, I'm just going to verify that I think it's always on a Wednesday. Yeah, and 18th happens to be a Wednesday, so exactly next week. But those are the expectations. I got to tell you, I look back on my X channel a while ago, just over the past couple of months. There was a time there where the Fed watch tool was actually at 0 for 25 basis points. So there's been a little bit of inflation, I should say inflation indications as of late. Now we went from 0 all the way to near 0 to near 100% on that. So very, very high probability of another rate cut. Look at that around December 18th, if in fact that does unfold. But those are big numbers, right? Those are big numbers. If you wanted to take a look at that too, I'll just throw this. That's just my handle into the chat right there, and you got it. Appreciate it, Cam. He's got us all set up. Oh yeah, can I sign up for the stacks? Let me just do this right now and show you that visually. I don't know if Cam might have mentioned this, but I'll just highlight this here. There it is. Okay, there's the stacks. So what you want to do is I just did a Google search, just Schwab STAX, and it just took me to the first initial page of it. And then all I did is I just clicked on show me the stacks. Let me see if I can pull it up, because I would want you to have full access to this, and then I will just go ahead and, well, let me just share this so you have it into the chat. Gosh, I'm sharing a lot. Hope it's not cluttering too much, but that is the stacks right there. And let's just do this real quick here. Schwab STAX. And I'll show you where you can click. Okay. So when it comes up, it'll look like this. Okay. And then what you can do is you can subscribe to it down here. So it will send it to you via email. It's great to have. You can read more about it at the bottom too. Before you do that, you got to click on Explore the Stacks. When you click on Explore the Stacks, then it just pulls up this page right here. So hopefully will get you there. Should. That link certainly will take you right to it. So you should be good there. All right. So we got past that. It is time now to take a look at sectors, which are interesting this week. Well, they've been interesting for a little bit. Some of them have. In fact, I'm going to detach this just to give us a little bit more room up top. Here's the detach. There we go. Oh, give me a secondary. Just gives us a little bit more room. It's a good way to fit more on your screen when you have 12 little charts trying to fit in here. But these are all 11 S&P 500 sectors. And down here, as you guys know, here is a look at the S&P 500 index. Now, we've been talking about this for about 3 weeks in terms of the consumer discretionary showing strength. And that was a breakout above highs here, right? We broke out right there. This is, I think, maybe one of the strongest that we have on the chart next to communication services as well. Breakout and then breakout again right there. Now look at this. It's been showing some really good strength right there, just almost day after day on a lot of these. And we've seen some strength in some of the stocks that have come up too. I'm going to just minimize that and highlight because we did get like stocks within this group. And if you get good earnings, they can continue to lift collectively. Because a lot of times when you see a move like that on the chart, I'll pull it up one more time. When you see this for the entire sector, a lot of times, I just got to put it in there. It's fundamentally related. F-U-N-D, without spelling it all out. Fundamentally related. Many times to get a whole sector or industry to go higher, there is a fundamental basis behind it. Growing earnings, growing revenues, things along those lines. How do you also detect that? You can look at the earnings themselves. Discretionary companies like Lulu. Earnings announcement, big gap, right? You got that one right there. Another one, ULTA. You see the gap off the bottom? Now, I bring this up to you because sometimes trends can strengthen around positive earnings, or they can completely reverse. Notice on this one on Ulta, we were not able to get above these highs for a while. Test, 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 test. Whoa, what do we have there? Positive earnings right there. At least according to what the market interpreted it, right? That it came in at 514. We click on it again. Yeah, so estimates were 447, came in at 514. Positive interpretation. What do we have today? It's looking like a K hold. The market's not done yet, so I can't say that, but it looks like we are closing by the high to low day. Sometimes that's how you reverse off the bottom, and then you get all these other patterns like cup and handles, flag patterns. I don't know if that'll happen. I got to put a big question mark here, but it could be starting here. Now, that information was already kind of plugged in that there might be some fundamental shifts when we looked at the sector itself, right? The sector showed that. So there's Lulu, there's Ulta, there are others in here too. I mean, kind of like on a retail side, you've got like, well, okay, so I would say Disney, clearly. Yeah, okay, so Disney's actually a little bit higher up on this earnings gap right here. Notice we're coming up all the way up here. There's your gap coming up to the top end. Now, are we getting a cup and handle? Cup and handle? Are we getting a flag pattern? We don't know. That's the question. But a positive earnings was a good sort of an indication. Folks, by the way, if you ever want to do just a quick dive on into this and say, Mike, is Disney really discretionary? We know that some portions of Disney are, but what about other areas? Do this. It's so fast and easy to do. Go to your Analyze tab right over here. This breaks down what the company does. Company profile right there. Click on that company profile. Okay, it'll pull up a different screen. Look at this. This is so nice to have. This company, Trefis, that we work with, Trefis, well, they provide us information, I should say. All they do is that we get information from them, obviously on our platform here. But yeah, okay, this is when you see Trefis estimate. The reason why I'm bringing that up is I just want to let you know that's the name of the company that's providing this on the platform. Now, experiences sounds kind of discretionary to me. Entertainment, 100% discretionary. Sports, discretionary, right? So can you kind of find out, there's other ways to see, but this kind of breaks it down, what portion of Disney does what. Just keep that in mind. It's a nice little place to be able to go. Again, you can spot that. Just go to your Analyze tab up top, sub-tab, Analyze tab, and then Company Profile is where you'll find that. Company Profile. All right. Now, getting back to our discussion, there were a few other companies. So earnings have been out. Be mindful of earnings, just a couple of others. This is more of a um, sort of a, that was a good earnings gap here, but we still came back down on it. This is more, though, of a consumer staples company to a degree. That's Smucker's. Yep, that is the jam company. And this is not the jam company, but this is Copart. And you see how it broke above this high range over here? And the trends kind of started. Look at that. Almost like possibility of a flag pattern right there. Maybe a K hold today. Earnings kind of started that. So, right off that breakout. And then lastly, I'll just say MRVL. So in the semiconductor group, this is a fairly recent one, but there's your gap. And will it flag and go higher? So earnings can play a key role. Again, always check out earnings, a lot of information on earnings. And I just went, you got to go main tab, market watch, sub tab, calendar. I've actually got the S&P 500 in here. I'm looking at a whole index. You can click on the gear to do that if you haven't done that. I hate to go through these things so quickly, but trying to get a few things in here for you to see. There you go. S&P, look at the NASDAQ, whatever the case is, but looks like next week is our biggest day right there. That would be on the 19th. That's next Thursday. All right. So a few things to take a look at there as we go through it. All right. Well, we hit a few things. Let's go back to our sector grid. And I'll take a look at that and see what else we've got. I'm just taking a look at some news. Oh, let's see. John says, I'm sure you've shared this before, but you can share the grid. Absolutely. Yep. Let's share the grid right now. Let's just do that because, yeah, we do get new folks coming in. And by the way, welcome to you. Great. Let us know if you are new in the chat. Love to welcome you here and always appreciate that's our veterans coming back. But here you go, John. It's right there. And that will put this on here for you. Just a great way to view big picture what's happening. We've used this quite a bit to kind of direct us to areas of strength and weakness. Clearly areas of weakness, but collectively, yeah, you've kind of got discretionaries, infotech right through here, as well as communication services, just breaking, that's just really quite strong, right? Between this and, discretionaries, kind of the two key points. Of course, infotech looks pretty strong as well. Some of these, though, the staples, does that almost look like a flag pattern right there? Could be plenty of companies in those staples to take a look at. I want to show everybody again, just so we have this down. If we wanted to see what's really moving in communication services in the S&P and look at those exact stocks, we can see what's in this index specifically here. Okay, so let's do that. In fact, let's go to our scan tab. I'm going to clear this one off. And what I'm going to do is just go right in the S&P here, and I'm going to dip on down into industry. And we're going to see what was in that communication services right there. All I've got to do is go to industry here, right, under intersect with industry, communication services, and select all those. And so it's going to, by doing this, it's going to put exactly those same companies that were in, that make up this chart, the exact same ones that make up this chart in this group. And then we can see, hey, fundamentally, is this a breakout? If so, what stocks are really accounting for this move? Here's our scan right here. I'll pull implied volatility over here. I'll make this one kind of the most relevant to look at. There happen to be 22 companies that make up that index, and here they are. And notice we've been running here for how long now? At least a good solid week, if not 2 weeks. So I'm going to go ahead and go into the scan tab again, and we'll just click on this, click on it again, and there you go. So Google clearly showing really kind of some massive strength. In fact, I would say it's Google that's probably moving that today. Meta is also in there with IPG, Netflix, so some big names. But there you go, communication services. A lot of like these sort of social media, big, massive platforms here. You got obviously Netflix, Meta, and Google. So that's a great way to do it. So easy to do too. If we wanted to see what was in the staples or moving the staples, what could be flagging in the staples, go to your industry, go right up to the consumer staples, and then just make sure you select everything. Now, these are the individual industries we could select here. we're not going to do that. We're going to select the top one here, and we're going to take a look at it from that point on, okay? So now we've got the top one selected, and what I want to do now is just click on it again, and there are 38 companies in the S&P 500 that fall into that group. And here they are. It's loading up right now, and there you go. Yes, this is the Thinkorswim desktop. That is correct. Oh, got it. Awesome. Very good. And we're all set. You're welcome, John. Perfect. And this is what's moving this. So Walgreens, which has been down for a while, the last week it's actually been quite strong. I had no idea, but let's just take a look at it since we were able to pull that up and see what we've got on the individual stock itself. That's still WBA, right? Yeah. Oh, okay. So yeah, it's really been quite low for a while, but that might be one of the bigger moves off the bottom for some time. These guys, yeah. Anyways, you can break it down and look into more details on it. But there you go. The last pullback came right to 40. Interesting on that little bounce right there, which was a higher low. So it could or could not have accounted for that move, but looks like it did. Interesting. Anyways, nonetheless, but that is a good way to take a look and just see what is moving and correlate that to the markets and then the sectors. And once you spot the sectors, then you can break those sectors down, right? And look at the individual stocks behind them as well. So a lot of great information we can do just so quick. All right, very good. Well, let's go into our standard indicators here that we review each and every week in this class, starting with our market review. So we talked about this already, touching this upper line, but also mentioning that the linear regression line extends a little bit higher, and that could go with seasonality towards the end of the year if seasonality continues on up. Okay, now we had been dipping on the McClellan oscillator. Remember, again, if you get below the minus 100 and then break up above the 70, so it's got to dip below the minus 100, get above minus 70, then we have a 2 to 3 week kind of an expectation that this was built by Tom McClellan, the McClellan oscillator, expectation for prices to move up. If the reverse happens on the upside, it could move down. We just kind of bounced off that bottom. So still kind of in just general strength with the trend at this point in time. I'm going to back out of this and show you, though, that McClellan Summation Index is really kind of starting to flatten out a little bit. So in terms of strength that we would get off the NYSE, and then we're looking at the S&P 500, because this is a different basket of companies, about 2,800 plus stocks in there. This is kind of a bigger sort of a reference gauge as to what might be happening on our individual stocks here, but I should say on the S&P 500 within those stocks. But notice it's coming down, and that is a negative. So that is a negative, but it's tricky because we are kind of holding at this resistance level. So we might need to get above that level in order for this line to kind of flip higher. If it drags with it, it may be just too slow of a slope. So this is a negative right now, and we just want to be watching. When you get that negative, do we then get lower lows and lower highs? That is really going to be one of the key questions. We have to say the advanced decline line is doing really quite well. Now, it's kind of drifted off a little bit, but really kind of holding flat. So that remains, really quite positive, all else equal. We're not really seeing a dip in it. It's just kind of holding firm. All right, SPXEW. How are we doing? SPXEW, equal weight versus the market itself. What are we seeing here? When the equal weight drops lower, but then the larger basket that we see over here, we'll visualize this, the S&P 500, all these 500 companies versus the S&P 500 equal weight, because these are market cap weighted based upon the size of these blocks. If they were all to be market cap weighted, they'd all be the same size, right? But some move the markets more than others. Now, do you start to see what's maybe pushing the market higher here, folks? What's been moving up as of late? And moving up today, too. Apple had as well, but not today as much, right? Not today. NVIDIA to a degree. Broadcom. You've got, obviously, Alphabet, Amazon, Tesla. Look at the size of these. Meta right there. Okay. When we look at the equal weight, just trying to kind of mentally visualize all these blocks being the same size. Yeah. It's starting to break down a little bit. It's breaking down. a little bit more here. So we want to watch this and see what happens. Does it kind of bounce around? Does it come down? It's kind of interesting to see at this point, but that would be, I would say, we're just not getting the breadth. Now, we did come off of a new high, so I'm not going to just say a negative here. It's simply right now a higher low. And what we've seen in the past is some of these stragglers, these laggards, pick up and start making higher highs when the leaders of the group that we just looked at, the Alphabets, the Amazons, the Metas, okay, when they start making higher highs, these have tended to follow through. What could be tricky is when these don't follow through, and that's what we're looking for here. Do we begin to see this trend down? We're not seeing any indication of that. In fact, it has been steady as she goes right now, right to the upside. Pretty good. Now, we look down here at the Hindenburg Omen. Well, we had one spike here, right? As we look at the NY A itself, we're looking at the composites. We want that bigger basket too. It's dipping, and so too did the. Where are you? Oh, I know what I did. They're both dipping. SPX, EW. Sorry about that, but they are both dipping lower, including the larger basket, which we'd expect. In fact, these almost go in tandem. The equal weight and the NYSE composite frequently. But looking at the Omen here, let's flip this to a weekly chart, because remember what that tells us. That gives us a sense of 52-week new lows, a large number of 52-week new lows relative to 52-week new highs in the market. And I'm talking broadly speaking, like the NYA, NYSE Composite Index, roughly 2,800 plus companies. When it starts to show this, that's when things can break down. No indication of that at all. So that's a positive. Look at the summation index on a weekly chart. Incredibly strong. Still making some moves. Now on a daily, momentum slowed down a little bit. Let's continue on. Okay, we came all the way back down to this bottom in terms of NYSE highs on the year, new highs this year. Another clear indication. We're seeing highs in some of the big movers in the market, right? I mean, some of the bigger names, some of the higher weighted, those that carry a higher weighted element in the S&P 500 and other groups. But broadly speaking, we're right back down to these lower levels. Now, we've always kind of spiked up higher. Well, I say always relative to the points that we've been looking at with this trend. We've seemed to come up here. Now, that's no guarantee it's going to happen in the future. That's why we watch this. But as the market makes new highs, and we're going to see if the NYSE, that broader basket of stocks, can reverse and go higher here. If it doesn't reverse, then also it's very likely that we're just not getting the highs and enough highs in that group. And we've got to be very, very careful with it. Okay, we got to be very careful with that, folks. That was our seasonality. That's a very, very helpful tool. By the way, that's a 10-year. Notice the 10-year also kind of creeps up towards the end of the year. And that's your short term. I like to throw that short term in there. Last one we'll look at, and then we're going to be all, we can take a look at a few things, but there is the market forecast. It remains solidly above the 80%. I've tried to draw an 80 in there, but as long as that line holds up above 80, according to the way a lot of traders will trade, this is the intermediate term line in the market forecast, then the market is giving the go ahead for strength. But remember, this is the S&P 500 index. It is market weighted, right? And the bigger companies that represent that market cap weighting will just, what they'll do is that it will make these indicators show strength, but that's why it's really important to look behind the scenes at those other points. Okay, so we want to make sure we do that for sure, some of these others that we had looked at previously. So you'll find this script and these different screens that we've got within the description section under more under YouTube. You'll see some of those in there. I'm going to go ahead and put what we discussed today in there, some of the scripts I shared, so that if you're watching this in the archives, you can find it. Description section under more. Folks, smash that like button in the bottom right-hand corner of the screen or I should say the subscribe button. If you're not already subscribed, we have over 130,000 subscribers already, and love to have you on board. If you like today's presentation, hit that like button. I don't think we had a survey in the chat. Appreciate the help, Cam. It was great to have you all. There is a survey in the chat. Thank you for that. So that survey, if you guys could just click, if you wouldn't mind, if there's something you like or found informative, click on that. There's only 2 questions. I read through both of those, any sort of topic requests as well. So if you want to take a look at it. But it's good being with you today, folks. Have a great rest of the day.